My biggest losers and what I plan to do with them. That's the subject of today's video. Should be pretty interesting, at least I think it is. Like, who doesn't want to talk about the losers? Well, you have all these people talking about their incredible trades and the money they're making. Let's talk about the ones that are losing and what we're going to do with them going forward. My name is Adam Kahn. This is my dividend rotation journey. I hope everybody's doing well. Happy Monday. I hope you had a great weekend. It was my birthday. So that was tons of fun. Got to hang out with the wife and son, which is really what I like to do more than anything else. Stick around. Today's video should be really interesting. I hope you guys enjoy it. So why do I want to talk about the losers? Well, part of it is to address them and decide what the plan is going forward. For the most part, as long as nothing has changed in the company, nothing's going to change with what I do with them going forward. Now, as always, nothing in my videos is financial advice. I hope that none of you listen to me. Like, I really hope you don't listen to me. I think of myself as an idiot. But that being said, like, you need to do your own research when you're making your financial decisions. I am not a professional financial advisor. I do this stuff for entertainment purposes only, and because I enjoy it, it gives me something to do, keeps my brain active. But you need to decide what fits your portfolio. In fact, maybe I'll do a whole video on that. Comment below if that sounds interesting. And you know what? Comment below on your biggest losers too. Let me know which ones you have and what your plan is to do with them. Because for the most part, all of these stocks, unless I have a big gain that I take, and which I might because I am selling calls against my growth stocks to rotate into dividends to make it easier for my family. But unless I have a big gain that I need to take a loss on, I don't have too many plans to do with most of this, but I'm going to talk about these. They are in order of the largest loss dollar amount, not necessarily percentage. Just because that's how it came up on my screen, I can pull it up differently, and I find the dollars more interesting than the percentage. So, number one on the list is Starbucks. My average purchase price on Starbucks is $112.73, and its 52-week low, so everybody knows, is $75 and change. But I think it traded lower than that from the time that I had it, because I've had it a while. It's had some rough go, but to be honest, I've never changed my opinion on Starbucks, and my plan is to own it for 20 years. What I liked best about Starbucks is when all the YouTubers started going negative on it, because that was near the dead lows, and after they had bounced around there for a little bit, they had gone higher, they had come back down, and then finally people seem to be giving up on it. That's what I like to see, is the negativity out there, people giving up, nobody wanting to invest in something, and Starbucks is Starbucks. Like, okay, I get it. Maybe they're pushing their dividend payout ratio too far. Maybe their divisions in China are struggling. Maybe they made some decisions when a war came around and picked a side, and some people got upset about it. But you know what? When I drive past Starbucks, there is a line of cars around the corner. They have a great new CEO, and my guess is if he simplifies the menu and makes it easier for the baristas, they'll drive those sales and do just fine. They'll eliminate the ones that are struggling, and they'll stick with the best ones and possibly start expanding again. And if your time horizon is 20 years out or 40 years out, I think Starbucks will still be around. Now, that's why I don't say it's financial advice, but I think of Starbucks as like the drink version of McDonald's. There's going to be competition. People are going to come and go, but they're top in the food chain, pun intended, or not really when I first said it. And I think that continues. So being down money is not a concern. Being in my dividend rotation portfolio, while it's paying a lower yield than I would like, and it's using a lot of its free cash flow to do that, that I don't love so much. So if the stock does appreciate in value, it's one of the ones that I'll sell calls on, slowly rotate out of, and put into higher yielding stocks or things that I think there's better potential in. I don't want it to come across the wrong way that I just think they're the greatest. I do see some of the things that people are concerned about, but I also have faith in Mr. Brian Nichols, who's the new CEO. Like, he made Chipotle, and he's done a lot of great things in the restaurant world. I hope he brings that to Starbucks. And if something changes in my mind fundamentally over time, Of course, my opinion could change, but I like Starbucks. Now, number two, I struggle with a little bit more. It's the second largest one in terms of dollars for losers, which is Whirlpool. And part of it is, what a boring company. Now, nothing has changed. Again, similar to Starbucks, I don't plan to make any changes in the position, but it's actually at its 52-week low right now. When I look today, I think it was making it. Trading it like, let me take a look. I wrote it down because my memory sucks. Oh, I just wrote low today. I think it was like $65 and change, and my average purchase price is $108. Rather embarrassing, right? Well, I said this in other videos. As long as the overall portfolio is doing just fine, if I'm going to pick individual stocks, some of them are not going to do so well. And while everybody would like to pick the best winners, you are going to have a mix of winners and losers. The overall portfolio is doing just fine. So while Whirlpool kind of sucks, and they actually cut their dividend, which is something that bothers me, and they recently took on more debt, which also bothers me, but well, they sell washers and dryers and dishwashers and things that are cyclical. Maybe it turns around, maybe not. It is something I'll keep an eye on. If I start to worry that Whirlpool is really in jeopardy of like potentially going out of business or cutting the dividend even more, then it's something I probably would take the loss on, get out of a profit on something else to offset that in my taxes, and move on to something that pays a little bit better of a dividend. Next on my list, this one's a little embarrassing. And why is it embarrassing? I know better than to buy fashion. And not only that, I know better than to buy women's fashion. And that's Lululemon, where my average purchase price is $282 a share, and it's trading $177 with a low of $159, and I don't even think they pay a dividend. So what was I thinking? Well, it was around the holidays. I don't remember how long ago, if it was a year or 2 years or 3 years. And they have lines out the door, and I just think, Lululemon is a good brand. Where are they going? That hasn't changed. But my first comment really is the truth. I know better than to get involved in the fashion. It's why, like, I don't know, just stupidity, I guess. So right now, nothing's really changed, so I don't have plans on getting out of it. I did sell a call against it at a super high price. It's pretty worthless now. I think it's a $500 call, if not higher. Um, but what am I going to say? They still do a decent business. The PE ratio is really low, but my concern is it's really low because the growth is stagnated. And my wife, who used to really like Lululemon, is gravitating towards other brands, which tells me the popularity is gone. It's probably the same with other people, and they're going to have to make a transformation, possibly to sell things at a less expensive price to be able to drive the volume that they need to start trying to grow or something else. But I don't know, like, really, that's why I stay away from fashion, is things change in that world. Number four on my list is Portillo's. Oh, man. Now, Portillo's is near and dear to my heart. I do not plan to sell it. It is one of those that when I bought it, now forgive me, my average purchase price is $9.40. Its low is $4.41, and I think it's trading like $5 and change right now. But I bought Portillo's as a long-term hold. That's something that's like one of those, either I get lucky and it really expands and does really well, or it flounders and could even go out of business. It's a newer company in terms of being a publicly traded stock. They've been around a long time. I lived in Chicago for about 12 years, and Portillo's has a great product. It's also something that I think as they expand across the country is a little bit unique. I don't know too many places in a lot of states where you can get a Chicago Italian beef, or that you can get a real Chicago hot dog. I have to imagine as the world has changed, you're able to find it. Portillo's runs a really good business in the Chicagoland area. They are jam-packed all the time. I think it's just something I have to give time for it either to work or not work. I don't think the stock price is an indication of it not working, but I will say their same store sales have been dropping, and they've been feeling a bit of a squeeze, and as a new company that's trying to grow, that's really terrible. Like, you don't want to see same store sales dropping in a company that's new and hopefully growing. You would hope that their same store sales are growing with the company. And the last one I'm going to cover before I yap about some other things is PayPal. My timing really sucked in some ways. They had floundered for a long time. My average purchase price is about $68 a share. Then they had some earnings that they weren't bad, and they're still buying back stock, and the stock valuation seems okay, but something must be going on. Like, you ever watch Paul from Everything Money? Like, I find him really entertaining, but that whole system of like putting it into his thing to figure out the valuation, it's where I think it's kind of silly. Because quite honestly, the algorithms and the companies that you're competing against, they're pretty sophisticated. Go watch a few things with Dan Niles when he talks about how they're valuing a company and the details that they go into versus these stupid things that people make people more comfortable, that they punch in what they think the PE could be and what their future earnings are going to be like. You can't guess the future, and taking a company that is not growing at a fast pace and giving it a high PE and pretending like, oh, that means it's going to do really well, it's kind of stupid. Anyway, that being said, a strategy that is always looking for bargains, and PayPal was one of them, is typically going to be a strategy that owns a bunch of crap. So you also have to just buy the things that are the best and accept that the things that are the best are sometimes going to be overpriced. But if you're always looking for what's out of favor, you're always going to have things that lag. And maybe eventually something in there is going to catch itself and start doing better. I kick myself a little with PayPal, and as I'm shifting into dividends, it's easier for me to kick myself. But to be fair, nothing has changed in the company. Their earnings are okay. It just seems to be really hated by the street. And hopefully that's something that changes over time. But I worry that with the advent of AI, that somebody comes along, does a better job, and just crushes them. But I guess we'll see. I have no reason to sell it here. I'm hoping that the lows are in, which is just under that $40 level. And they did implement a small dividend. I think it's a little over a 1% yield. If that grows and if the company can start to grow and they can pay their shareholders, maybe I'll stick with it. I did sell calls against it, which, woohoo. So I made back a little bit of the percentage of what I'm down on the stock, but I'm getting crushed on the stock. So why did I decide to talk about my losing trades? Primarily because it's nothing to be embarrassed about. Not only that, you have to be really cautious about the people on YouTube who are sitting there touting their big winners, how awesome they're doing, especially when they're selling you on their programs and their books and sign up for their classes and whatever else. Like, I'm happy to sell a class. You guys want to pay $1 million a week? I will be happy to give my precious time to somebody to help train them in the things that I look at. I just think you have to have a long time horizon and not get overly caught up in the stupidity of what people try to sell. Because it's very hard to predict the future with whatever it is. Like, nobody really knows the future. AI scares the heck out of me, so I sure can't predict the future. But there's nothing to be embarrassed about if you pick a bad stock. Now, if you don't want to pick individual stocks, you can pick ETFs that really mitigate your risk in terms of picking, one stock that does really poorly. But my attitude is if you diversify and pick somewhere around 30 or 40 different stocks. Now that depends on the size of your portfolio, which would also mean that ETFs could be a really good route. But there are things out there that just invest in the stock market. And I think being invested in general is a really good thing. Like, if I were starting over and they had the tools that they have available today, I probably would just have bought VOO and QQQM and just kept adding on and adding on and adding on. Now that I'm older, I would probably rotate into something like an SCHD. As I'm rotating into dividends, why am I picking my own? Well, I think I can get a higher starting yield and things because if I were a little bit younger, maybe I would want some growth from those yields. But for me personally, I want the income. So I'm a little bit more greedy about the yield that I want. Now, that being said, I'm not about to chase those things that sell covered calls or something like that. I really don't like the covered call strategy. I think it's a big mistake no matter how safe. Like, maybe I mix in a little JEPI or JEPQ. I don't mean to rattle off a bunch of ticker symbols. I mean, do you guys invest in these things? I'd be curious. Do you guys have some of the covered calls in your portfolio? By the way, sorry, brain rambling. Thank you. I can't tell you how excited I am to have 70 subscribers already. That's awesome. I know maybe it doesn't sound like a lot, but I mean it when I say that's awesome, because when I switched from the other channel to doing this channel, I like a small community. I like that we get to chat a bit. I'm able to answer anybody. Not that I wasn't in the others. Just keep in mind, be respectful. I ended up kicking somebody off because he drives me nuts. I don't know if you guys noticed the comment section with that guy Joe who sits there with his technicals and whatever else. I really mean it, that if somebody was really talented at trading, they wouldn't be wasting their time in the comment section talking about their incredible trades. They would just be doing it. Why do I do this? Because I'm shifting out of trading into longer term investing and just having the dividends come in. Because while I love the markets and I love watching them, I keep a small trading account because it's fun for me and it keeps me active. But this gives me something to do and keep my brain going. I don't want to be completely retired. I even still work a little bit, but my goal is a little bit less and a little bit less, a little bit more time with my family. But if I can take a couple hours out of my day and sit out here and enjoy the weather and chat about the things I love, what a great way to be able to spend my time. I decided, though, as a side note, I am going to start bowling a little bit and see if I enjoy that. We went for my birthday yesterday. We never go. I mean, we go once every 2 or 3 years, but every time I go, it's kind of fun. So I thought, why not run down during the day and throw a few games and see if I enjoy that. Anyway, that's just another thing to yap about. I'm curious what you guys think of my five losers. Are they garbage? Are they something I should just be getting at? To be perfectly honest, Starbucks for sure is not anything I plan to get out of. The only thing I kind of kicked myself is I put on too big a position, not because it went against me, but just because it was too big a position to buy into one equity when I bought it at the price I was buying it at. But I'm okay with the trade, and it really doesn't bother me, and I'm collecting the dividend the past, I don't even know how many years at this point. So, but what do you guys think? Like, even when I look at the names, I mean, Whirlpool, Lululemon, Portillo's, and PayPal, maybe not the greatest picks. Like, when I talk about Meta, Google, Amazon, I know they're great companies. So I'd like to work on finding some dividend stocks that have a decent yield and fit that category too. I don't want it to be Coca-Cola or things that I just see no potential for growth on that also don't pay much of a dividend, in my opinion. But I don't know. There's got to be things out there that have some real potential that are a good name as we go into probably this rate cutting cycle, where I have a theory that I think the best pricing, if you're looking for mortgages, I envision being right around the time when there's the transition into the new Fed chairman from the old, because people are going to be so optimistic about the cuts that are coming, the banks will have already gotten ahead of it. And then when they actually cut, assuming they do, if we have inflation, it may not be so simple. But either way, as the cuts start coming around, the pricing will already be accounted for. People also don't seem to understand that when they cut rates, it's the Fed funds rate and not mortgage rates or 10 years. They really aren't doing anything to the long end of the curve. So, anyway, just my own off topic type of thing. So, what do you guys think of those stocks? What are some good dividenders that you guys are getting in? I've been looking at these midstream oil companies like Hess Midstream. I was glad I picked up where I did. MLPA, and there's a few others that I saw in a video where somebody had, their top 10 midstream oil companies, and I was looking at some of those. But what else? Where else do you guys find that you like? Um, I guess I got a long time because I figure 3 to 5 years. Tomorrow, 11 a.m. Pacific time, I'm going to do another live. Hopefully some of you can make it. I do know, I recognize the time sucks. I know I say that every time, but I get it. Either way, it fits my schedule. I hope you guys can make it. I love that platform, but I'll be doing a live again tomorrow, 11 a.m. Try to make it. Do me a favor before I go. One, enjoy your Monday. Two, don't feel like you have to subscribe or hit the like button. I hope you do if you enjoy the information, but if not, well, hopefully, if you've made it this far, I'd like to think you enjoy the video. But either way, whether you hit the like or subscribe or whatever, I hope there's some entertainment here. Have a great Monday, and I'm sure I'll see some of you guys tomorrow. Bye bye now.